bullish signal for tech stocks. Erin Browne, PIMCO Managing Director, Portfolio Manager as well, joins us now. It's nice to see you again. Are you already buying big cap tech in anticipation of this?
We have. We started buying equities a little bit across the board and gotten modestly overweight, versus our benchmark. I think, many of these growth-oriented names that are considered more long-duration assets have really suffered at the hands of higher inflation and higher yields. And I think now that we're starting to see, at least a pathway for lower inflation, on the horizon, at least for core, headlines should stay up there. I do think that you're going to start to see some of these growth names stabilize and start to see a little bit more bid back to large cap tech.
Which ones have you already started buying, if you don't mind me asking?
Well, we're looking at the higher growth oriented the higher sort of free cash flow generative companies. Some of the large cap FANG names I think look attractive here. Ones with idiosyncratic risk I would stay away from, but I do think that, by and large, you think about, names that are sort of top of mind for large cap tech, and that's sort of what we're buying.
Okay, all right. I appreciate that. Going into as much detail as you could, I totally understand. What about this idea, and I hope you heard our conversation with Mike Wilson a few moments ago, you're buying and you're increasing risk at a time where he says the story still can fall apart, and it's going to fall apart because earnings have yet to come down to a place where they really need to.
Yeah, I think Josh was really right about his comments earlier. I mean, the market's already anticipated. I think the fact that generally analysts are behind the curve in terms of how they forecast earnings. And so the market's already anticipating, something in the low single digits for earnings growth this year. We've seen multiples compress from about 21.5 times to about 17.8 times today. It's pretty big multiple compressions year to date. At the same time, we've seen the average stock in the S&P 500 trade considerably lower. And so we've been in, I think, an earnings recession for the equity markets, at least in terms of how people are pricing and investors are pricing it for a little bit of time now. I think that everyone's already, sort of expects that earnings estimates are going to come down. I don't think that's going to be a surprise to anyone.
Quickly, before I let you go, some of your newest thoughts are to short the shippers and go long solar. Can you briefly tell me why on both of those trades?
Sure. On the shippers, we've seen, broadly speaking, across the consumer durable space, pretty significant, multiple compression and stocks, fall. And we've seen the shippers really outperform. I think a lot of this is on optimism of a Chinese opening, particularly in the last couple of weeks. In our view, you're already started to see shipping volumes start to decline. I think that the pricing power that they've had over the last 2 years is going to start to decline as well. And at the same time, you have, potential disruption from the longshoreman contract, which is ongoing right now. And so I think that shippers right here, just based on the outperformance, based on the fact that there's a lot priced into these names, stand poised to underperform. On the solar names, we've had pretty good news over the last couple of days, and particularly today, from President Biden supporting, more production for solar panels. One thing that's been really holding back solar production here in the U.S. has been these tariffs that have been longstanding. Now that we're seeing this lifted for the next 2 years, you're going to see a lot more production coming back onshore. The supply chain is going to ease, and particularly the more growth-oriented the growth-oriented solar names here in the U.S. I think are going to really start to do well. So despite the bounce that we saw today, I think that there's a lot more in store for these names.
All right, good stuff. Erin, I appreciate your time as always. That's Erin Browne of PIMCO joining us there.